What's up, winners? Nam here. So in today's video, I'm gonna go over 5 ETFs that you can invest in for high growth. Investing into ETFs to weeks and months at a time is the most passive and the easiest way to invest your money. If you are a lazy investor just like myself and you don't want to look at your stocks on a daily basis, this is the perfect video for you. If this is your first time here and you want to learn more about investing and getting better at your personal finances, make sure you hit that subscribe button so you don't miss out on any other future videos. So let's stop wasting your time and get right into the exchange traded funds. So kicking things off with ETF number 1, which will be Amplify Online Retail ETF, ticker symbol IBUY. The year-to-date return for this ETF has been 51.3%. So in a nutshell, this ETF has a diversified basket of companies that earn a lot of revenue from online and virtual sales. So basically, online shopping. So with the hit of the pandemic ever since March, online sales and online retailers have been shooting right through the roof. There was also an article recently that showed that Amazon Jeff Bezos, during this whole pandemic, he added a $34.6 billion to his wealth. Even though this pandemic was a catalyst for many online retailers, I don't think that virtual sales or retail is gonna go away anytime soon. So now let's take a look at IBUY's data sheet. Global online sales are expected to grow by 104% by 2022, and the amount of online buyers worldwide is expected to grow 53% by 2021. So now let's get a little bit more of the nitty-gritty into this particular ETF. This company has a total of 47 online retail companies that they are invested in. So now I'm just going to name off some of the biggest holdings, which will be Overstock, Stitch Fix Inc., Playtown Interactive, Revlon Group, and Grubhub. There are also some other big boys in this group as well, such as Amazon, eBay, and PayPal. So now let's talk more about the fees of this ETF. There is an expense ratio of 0.65%, meaning that for every $1,000 that you do invest, it's going to cost you $6.50 a year. Normally, if you were to get an ETF that mirrors an index, the expense ratio would be much smaller. So for instance, Vanguard 500 Index Fund, which is VOO, it mirrors the S&P 500. It has an expense ratio of 0.03%, meaning that for every $1,000 that you spend on it, it will cost you 3 cents. Actively managed funds tend to have a higher expense ratio. At the making of this video, this ETF is trading around $92. The 52-week range has been around $33 to $93, and it also has $500 million in net assets. So now let's take a look at the chart. So starting on the monthly charts, let me give you guys a breakdown of what I have on the chart right now. So I have the Ichimoku cloud system. So there's a total of 4 lines here. I have the MACD down here, and I also have the RSI. As you guys can see on the chart right here, ever since April of 2020, it's been parabolic ever since. The lagging span is bullish. The Tekkensen and the Kijun is bullish, and also the cloud is bullish as well. MACD bullish, RSI overbought. But the thing about overbought ETFs is that it can get much more expensive in the future as well. So for ETFs, I would just dollar cost average in. So let's take a look at the weekly charts. Everything looks bullish as well. It's starting to look like it's slowing down right around $92, $93 or so. So if it breaks $93, it's probably going to take off right again. The cloud is still bullish, Lagastan bullish, all signals are bullish. MACD bullish, RSI overbought, but again, I would just dollar cost average in. So moving on to our next ETF. This one is going to be ARK Autonomous Technology and Robotics ETF, ticker symbol ARKQ. The year to date for this ETF has been around 35%. ARK Invest actually has a bunch of different type of ETFs. They mainly specialize in innovative and high growth companies. If any of you guys watched my previous video, which I'll link right here, I did speak about ARKK, which invests in disruptive companies such as Tesla, so check that out if you haven't already. But as for ARKQ, this ETF comprises of companies that specialize in robotics, autonomous vehicles, energy storage, 3D printing, and space exploration. It almost sounds like Elon Musk in a nutshell. And yes, this ETF has holdings in Tesla. So I'll show an image of the total ETF breakdown so you have a better understanding of what is in this fund. So here are some of the top holdings for this particular ETF. This will include Tesla, U2 Inc., Xilinx, Proto Labs, and Materialize NVADR. So as a reminder, this is an actively managed fund, meaning that there is a fund manager who actively buys and sells different type of companies. The expense ratio for this ETF is going to be 0.75%, which is not too bad for an actively managed fund. So on the topic of numbers, this ETF has been trading around $58 and has a 52-week range between $26 to $59. According to ARK's research, the autonomous ride-hailing opportunity should be worth more than $1 trillion today, $5 trillion by 2024, and $9 trillion by 2029. And also, this fund is managed by Cathie Wood. She's a Tesla bull who thinks Tesla is going to go all the way up to $6,800. So now let's move on to the chart. Starting off with the monthly charts, everything is straight up bullish. The price action is looking like it's going to the moon. The TK lines are conjoining together, pointing upwards. Look at the cloud, is pointing upwards. So there's a lot of momentum behind this ETF. MACD is going up. So is the RSI, starting to look overbought. So dollar cost averaging for this ETF. So on the weekly charts, there's no slowing of momentum here. MACD's bullish. RSI is becoming way overbought. But again, just dollar cost average in. I would just buy in at the current price and just have a stop loss at around $50 or so. And that would be a pretty good entry point right there. Now let's talk about ETF number 3. First Trust Dow Jones Internet Index Fund, ticker symbol FDN. The year to date for this particular ETF is around 32%. So in a nutshell, this ETF follows the largest and most actively traded stocks of US companies in the internet industry. So anything that falls under the umbrella of internet commerce, retail, search, investment products, social media, and internet radio. So anything that will use the internet to provide services will be considered a legitimate company for this ETF. So now let's go over some of the top holdings for this fund. To name a few, this would be Amazon, Facebook, PayPal, Netflix, and Cisco Systems. So now let's go over the numbers just a little bit more. The current trading price for this ETF is around $196. The 52-week range for this fund is $105 all the way up to $198. This also has an expense ratio of 0.52%. Out of all the ETFs that I did talk about, this is one of the more simpler ETFs since it just deals with companies that revolve around the internet. We all know how important the internet is and how it shaped our world and how everything is connected by the internet nowadays. I don't think the internet is going to be going down anytime soon, but if it does, you probably won't see my YouTube videos anymore. But now let's take a closer look at the chart. So starting off with the monthly charts, the Ichimoku cloud system, all signs are bullish. Lagging span is bullish. The TK lines are pointing upwards, so there's a lot of momentum right there. The cloud system is pointing upwards as well. The price action is straight up parabolic. So for me, honestly, I would just dollar cost average in and just put whatever you want on a weekly basis or on a monthly basis. MACD, bullish. RSI, bullish as well, but it's starting to become overbought. So again, just dollar cost average in. Now moving on to the weekly charts, all signs look good as well. It recently just broke out at around 185. So I think this is going to run up quite a bit more. But again, dollar cost average in, invest on a weekly basis. MACD looking bullish. RSI starting to become overbought again on the weekly charts. But everything else looks pretty good. Now let's keep it moving with ETF number 4, which will be Global X Lithium and Battery Tech ETF, ticker symbol LIT. On a serious note, this has the most lit ticker symbol, no pun intended. The year to date on this ETF is around 32%. So in a nutshell, lit invests in companies that deal with the full lithium process, from mining and refining the metal and battery production. So all of the companies that are in this ETF deals with lithium battery technology. So currently this company is diversified in 42 different types of holdings and it has an expense ratio of 0.75%. The current assets under management is $570 million. Now let's take a closer look at the top 5 holdings for this fund. This would include IBUY Corp, Ganfeng Lithium, BYD Co., LG Chem, and the almighty Tesla. Now let's dive a little bit deeper into the numbers. At the making of this video, this is trading around $39 per share, and the 52-week range has been around $17 to $39. And this fund has a dividend yield of 1.4%. The demand for lithium products has increased year after year. With the rise of electronic vehicles, electronic devices, and pretty much anything that needs a rechargeable battery, lithium is a much needed source. It is suspected by 2040, electric vehicles are expected to reach over 50% of all new car sales, surpassing regular cars. So now let's move on to the charts. So starting off with the monthly charts, it recently just broke out this cloud. So there is a lot of bullish momentum. Lag span is bullish. It's full strong signal quite yet since the cloud right here is still bearish. So this is kind of a moderate signal, but the MACD still looking bullish. RSI looking bullish for sure, not overbought yet. So now let's take a look at the weekly chart. On the weekly chart, everything actually looks really good. All signals are bullish on the Ichimoku cloud system. MACD is bullish. RSI is not, or no, it is. RSI is a little bit overbought, but there's a lot of bullish momentum behind it. So this may be a good entry point right here, and just have your stop loss at around the Tekkensen, which is around $35 or so, and just dollar cost averaging on a weekly basis. So now let's talk about ETF number 5, Crane Shares CSI China Internet ETF, ticker symbol KWEB. The year-to-date returns for this ETF has been around 43%. This ETF is very similar to FDYN, which I mentioned earlier, but the main difference about this ETF is that it mainly focuses on internet companies in China. So in a nutshell, any internet company that's similar to Google, Facebook, Twitter, or Amazon, and if there's a Chinese version of a similar company, then it's probably inside of this ETF. So here are some of the highlights of the Chinese internet sector. Chinese retail web sales total over $1.5 trillion in 2019, which has increased 16.5% year after year. The total Chinese retail sales reached over $5.8 trillion in 2019, and retail shopping accounted for 25.8% of all retail purchases. The net assets for this particular ETF is $2.7 billion, and it has an operating expense ratio of 0.76%. So now let's talk more about some of the top holdings for this ETF. This would include Tencent Holdings, Alibaba Group, Meituan, Pinduoduo, I think, and JD.com Inc. Now moving on to the numbers. At the making of this video, KWEB is trading around $72. The 52-week range for this ETF has been between $38 to $72, and it also has a dividend yield of 0.07%, which is better than nothing. Alright, now let's move on to my favorite part, the charts. So starting off with the monthly charts, it recently just broke its all-time highs ever since January of 2018. So the all-time high was roughly around, $68. So it's starting to see a lot of momentum pointing upwards. Lagging span's bullish, Cloud is starting to be bullish, MACD bullish, RSI is still bullish but starting to become overbought. So for this particular ETF, I would just advise just dollar cost averaging in. So on the weekly charts, everything is bullish. Lagging span bullish, price action is bullish, the Cloud is bullish. So the Kijun, which is the red line right here, it's pointing upwards, meaning that there's a lot of momentum behind the price action. So taking a look at the MACD, bullish, RSI, bullish, starting to become a little bit overbought. But you see there's a little peak right here and it's a little bit lower. So since it's making higher highs, but the RSI is starting to make lower highs, there could be a possible bearish divergence. So just keep an eye on that and just dollar cost averaging to this particular ETF. So before I go, if you guys want any free stocks, just use my description links in the description below. And if you guys haven't already, make sure you give this video a like because that really helps support your channel. And if you want to hang out with me some more, check out my videos over here.